The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is, of course, the Wednesday, March the 27th edition. And my pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon Eastern Time, this time exactly. And I'd love to take your calls. This is a fabulous day. This is the perfect day for taking calls. A couple of reasons why. Market is cusping right now. What does that mean? It means it's getting a little long in the tooth, this rally, and that there's a good chance that we are, you could make a nominal new high, but I'd be really surprised if we actually break out at this level without a consolidation, even if it's just a shorter-term consolidation. Hey, that's just my opinion. In my opening call, we took profits, really great profits on the 200% long. Dow 30, the DDM, from March the 4th, we got in at the opening, and we got out 2 days ago, just almost at within 20 or 30 cents of the exact top. And half a position, the other half was about a point lower. And we are, in fact, now looking at the short side, implementing more shorts than longs at this particular point. And day is young, but so far at least all the shorts are working. But, hey, by 4 o'clock, anything could happen. Most importantly in this particular period, and what I think is going to be one of the factors, is that we might find out that those 1 million people in an entire country of Cyprus impacts to a much greater extent than everyone's talking about now, rather than dismissing them. What is this? This is the population of downtown Boston or something. We might find that the market is actually vulnerable to being vulnerable. In other words, susceptible to any weakness that comes. It just needs a trigger, that's all. But at the same time, what I find really interesting is that there's still a rotational bias, and that rotational bias says some stocks continue to act well. And I'm just going to grab, let me do a couple of things here. I just run the numbers. Dow's down 59, was down about 100 and something down earlier on. So it's come back nicely. Will this fail? Well, we're going to be watching the VIX very closely and other things, and we'll talk about that because the T-bonds are up, TLT's up $1.08 at 118.44. I suspect only in the 119 to 20 area and higher will bonds actually have an impact on market weakness. So let's run the numbers. So Dow's at 14,499, having just missed yesterday by less than 2 points, making a new high. Now, that is part of one of the techniques that I've developed over the years. I use it in the monthly charts. It's worked nicely in the weekly, and occasionally it works in the daily. We'll see if this particular technique, the two-bar failure pattern, is going to work. I don't know. I suspect it's going to give some kind of a pullback. When I say work, I mean, 3%. Not just these 1% moves down, 3%, maybe 4%, something like that. We'll see. Now we've got the S&P down 5 3/4 at 1558. The comp index is down 11 at 3240. Not bad action. Apple is down 8 at 453, and that, of course, is a big influence. Gold is up 7 at 1602.80. Now I've got the gold contract. The chart you're looking at here, folks, let me just before, if you're looking at Tiger TV, the chart that I have up here, the one on the left is the daily, the one on the right is the 120-minute chart, and you will just see that there's a pattern that's become very familiar. It's the cup formation that has a potential. I'm going to make this just a little smaller because at this particular point I can't overemphasize anything. I just want to show there's a potential for a cup formation at a triple top, if 1560.50 isn't pierced decisively in the next day or two. But if the downside of today's low of 1545.75, this is the E-mini futures, is taken out, watch out, because then we're looking at the next level of support at 1535. So those are the steps that I'm looking at. When does it break out again? Of course, it breaks out if it breaks decisively above 1560.50. The 120-minute chart gave a sell signal at the 1560 hit twice from the other day, the 24th or 5th, was it? The 25th, and then again 1560.50 yesterday, and pulled back quite smartly. And this cup formation says, be careful, because if the low of today, of course, I just said that 1545.75 is taken out by tomorrow, we could easily go to 1541, which is a 200-period exponential moving average. So now let's go back to what I was talking about. I was talking about gold, the GCJ. The April con, I'll have to change that, go to March. Made a peak D with a lousy move up when you consider that the stochastic was so strong. This is now the left chart. Let me get rid of the 120-minute chart there. And you'll see that the resistance at 1610, I believe it is, up 1610.50 and then 1628. Those are the resistance levels to look at. If there is a crisis tomorrow, I suspect gold will, in fact, move smartly high. It should. That's what you'd expect, for it to move smartly higher. But in the meantime, it's just stuck in this trading range between the 1618, 1620 level on the futures and probably 1580 as support, just going sideways. So we'll be watching that closer. The silver is down 17 cents at 28.50. Hey, silver chart, I spoke about this the other day. If ever there's just a horrible looking chart, it's that silver chart going in this very narrow arch formation, except for one little thing. Once that arch formation has been retested and holds above the left side low bar, in this case is the low bar of 27.925 back on the 1st of March, and today's low so far is 20, and let's move this up here, is 28.08. That says, okay, now you've got to watch this, because from a dreaded H pattern, this lowercase h pattern, you can get quite a sharp move to the upside. So I'm going to be watching that real closely. I don't know whether it's just a temporary thing, if it's going to be a more serious one. I just don't know. So when I don't know, I just say step aside here, let the market play out. Now, high-grade copper is still acting very poorly. HJ, let's go to the M. HJM, now I have to go to HJK, and that K, that's the May contract, is, it's also just testing out on the left side low. Actually, it's holding quite nicely, but the weekly chart says, whoa, be careful. That Roman candle low of last week, and that candle itself of 3.38, that is going to be critical, because if copper goes to 3.41, it's at 3.43 right now, there's just a really good chance it's going to test the low of 3.38. Got to be careful. So that's that. Now let's go to, and then crude oil is just, what's crude oil? USO, let's go to the USO just for now. The USO is having a nice bounce. Oops, a nice bounce. I didn't even see that. This is peak in the ChapmanWave. Remember the methodology I used for those of you who are new to the den, you're seeing my charts for the first time, or maybe new to the show and looking at Tiger TV. Hey, don't forget, this is a fabulous offer going on right now on TFNM. If you go to the front page of TFNM, you can see you can sign up before March the 31st to get a month free of the Tiger's Den. You can see all these charts that we all show. You can see this is leg D, possible peak D in the oil contract right now, except the stochastics at 84%. That's good. And the MACD is expanding. So far, that's kind of good. A lot of resistance up against this bar right here, that candle of the 20th of February, 35.03. It's at 34.29 right now. So TLT, that's what I need to look at. The TLT spiked to a leg C, but it's under this, what I call a gray peak C, or a leg C in this case, because it's under the most recent high of 119.67 at that peak B minus, which failed. So this is, it's the same pattern I keep talking about. Let me get rid of the gray, because the gray, in fact, can make it a little bit cloudy. It's in a downtrend line resistance point right now. The stochastic's at 78 and rising. If the stochastic gets to 81 or 82%, then crude oil can bounce to 119.99, the 200-period exponential moving average. That'll be resistance, because first of all, it has to act as resistance, and then hopefully it turns into support if you're not bullish. But in the meantime, this is very similar to the bonds. Look at the patterns. Let me just do it like this. This is the daily. This is the weekly. Let's skip the monthly for now. There's the weekly, the one with the golden egg, which could work to the downside. Got to be careful. Now, what I'm looking at is, look at this, TLT. That's the Lehman 20-year T-bond fund. Very similar, huh? Leg C underneath the previous peak. They're in parallel motion. So we'll keep an eye on that because it looks to me like the TLT wants to move a little higher. And if the stochastic goes to 81% and the MACD continues to rise, it will challenge at 119.67 level and break out. Now, the TBT, which is the opposite, the TBT is in fact the short side, has made a peak E in the weekly chart. And that peak E, you can easily put it under the category of an H pattern that goes to an M pattern. So we'll be watching this closely because it will go down. At this point, it's at 65.19. The TLT was at 118.34. And what I'm looking at here is if this trend line here, that trend line there is broken, and the TBT takes out on the downside, takes out 61.60, then there's a good chance that TLT is going to have a really good sesh, a couple of weeks, in fact, or 10 days, let's call it, to the upside. So I'm missing what? I'm missing the dollar. Here we go. DXY. The DXY is, in fact, that broke out. Now, this is going to be a very interesting pattern. I've been looking for one of these for a long time. There's a chance that the dollar has a pattern that I call the unusual. If that's the case, then the dollar should continue to rally, and that rally should take it higher. And at some point, not only is it going to come back down, but it's going to take out the base of the restart, which is somewhere between 82.07 and let's call it 81.90. So I'm going to be watching this really closely. And there's a second reason why I'm watching it very closely is because today it started leg D up in the weekly chart. And this is a technique that I developed a long time ago. It basically looks at what I call the left side, right side price time match. And in this particular instance, I'm going to open up the chart. This is the weekly chart, and you will see that there's a cup formation, and I've drawn this in some time ago, that there was a second cup forming. So many of these are making this double cup formation. And this double cup formation, if you look at it in the larger context, look, it's like a big cup and handle, but it's not an official one. Why? Because I've taken it from the doji high of the week of the 23rd of July of 2010, but the real top was at 88.71. So this is going to be very interesting to watch to see how if it's going to break out in this leg T, because this cup and ladle gives you a T, and then you've got to be careful. So I'm going to take your calls at 877-927-6648. Great day for it. Basil Chapman, Tiger Technicians Hour, and hey, Dow's up, down minus 47.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
So we were talking about the dollar, and to do the dollar, we've got to look at other currencies as well. So basically what we're looking at is the dollar DXY has, in the weekly chart, accelerated from the 200-period exponential moving average, which was tremendous resistance early on, up into the turn of the year, January, and then in January it started to try to develop it as a support level, and then that support level just kicked in and took it all the way back towards the top of the resistance level of 84.10, which was the high of July week of the 27th of last year, 84.10, pulls back to 78.60. There's a left side, right side price time match that says by next week the dollar should at least attempt to get close to 84.10. That's number one. Number two, and this is very important for me, is that the cup and ladle pattern is very different to the cup and handle pattern. But this isn't an official cup and handle, because you really need to get all the way to 88.71, the high back in June. Was it June of 2010? Yeah, 2010, the week of the 11th. So this is what I've considered to be a cup and handle. Not one of my favorite patterns, but I recognize what it's doing with this double cup formation, making higher highs and higher lows, then you anticipate it should break above 84.10, and then you got to be careful. But stochastics at 86% and the MACD is still expanding. That's number one. Number two is that when you put it together with the EUR-USD, which would I should have done that. I haven't. You could make them as not just a currency pair, but a currency pair of a currency pair. In other words, what you could do is what I often do here. Let me just see if I can get to it very quickly. Now, you see this particular chart right here. And for those of you who are new to my work, this is what I send our subscribers every day. Very, very comprehensive discussion. This is the 120-minute chart of the Dow. This is the 120-minute chart volatility index, which is at 1310. Try to pop up to I said in the 14s, the selling will, 13.40s, the selling will increase. but into the 14s it'll stay. It'll remain into the close. And what we're looking at is back at 1310. This is the volatility, the short-term trading index developed by Richard Arms. I use it in a particular way. It's got a signal here that says be careful. There could be some kind of buying pressure. We might have seen that some today already. And this is the top. This is the daily chart of the Dow, the daily chart of the S&P. What I wanted to show you was this. Look at the inverse relationship between the buy signal and the sell signal. This is the DOG, which is 100% short the Dow 30. Now, I say 100% short. It doesn't really work that way. And then what happens is, this is on the upside. I haven't completed the notation because I do it in so many different charts. But you can see the little double top that's forming and the little double bottom that's forming. So this is a very important moment. Why? Because it's got nothing to do with Europe. That would just be a trigger. That's all it needs is a little trigger here to have some kind of a digestive phase. And what? Big deal. So it goes from 144.74 in the diamonds to 141 to 139. What is that? 4 or 5 points? That's 5, not even 3.5%. Even that would be nothing. And then the DOG could have a bit of a bounce, and it goes from 30.77 to 31.48, 31.57. If this is going to be a benign kind of a pullback, I still expect, because the tradition for us in my opening call is at a certain point, under certain conditions, when the Dow gets to a peak D or E, that's where we automatically set up a trade that says we want to be short, sometimes deeper, sometimes shorter, the Dow. So I just wanted to show you that in this particular chart of the DOG and the DIA is the long side of the Dow. You could, in fact, I don't know if I want to do it right now. I wouldn't be able to mix the things. You could have the dollar on the one side and the EUR USD, the euro dollar on the other, and see the mirror image relationship that often happens. Not always, but often enough. So that's what I wanted to point out. We're all about techniques here at TFN. That's one of the techniques I had. Now, a question in the den is, Basil, the last two downdrafts only produce a trough C. Is that common in the 30-minute chart? I have to say that if it's only to a trough D, a trough B, in other words, on the way down, we'll look at troughs. Let me explain what I'm looking at here. When you're coming down, you see the lowercase letters. That denotes down mode, and the uppercase denotes an up mode, a buy mode. So I actually just going to a trough B or a C and then having a big move, that's very positive. That's like a failure on the downside. Like on the upside, if you failed at a peak C minus, the third peak, like it did here, that's very negative. See, there it is, right there. These techniques, they work over and over and over. So the euro dollar is still very weak. It's about to try to test the 1.266. Not about. If it does test the 1.266 in the next couple of days, it better hold there. Otherwise, it's going much lower, and then the dollar can go much higher. So we've got John and Philly waiting patiently. John, I'll be right with you. Basil Chapman, 877-927-6648. Dow's only down minus 49. S&P's down 4.83. Interesting. Fascinating day today.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data, free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tech Technicians Hour, and the Dow's coming back very nicely, down 43, and the down only 39, 3.96 on the S&P. A good springback rally, and one of the reasons why I looked at it as a potential just a few minutes ago is that the volatility index gave back a huge chunk. It was the high was 1397. It's down at 13.07. In that 13s, it's just constantly been buying pressure. So we're going to continue to look at this, and we are on right now with John in Philly. Hi, John. How are you?
Good day to you, Basil. Thanks for taking the call.
My pleasure.
Basil, I have not asked you about this name in quite a while.
Quite a while.
It's Goldcorp GG. I am asking you for your assessment of the stock, looking specifically at the weekly, the monthly chart, the longer term, if you will.
Okay, my pleasure. Now, what I'm really looking at here, first of all, I just want to quickly go to the daily chart to say that the stochastic and MACD acted extremely well, but it hasn't given very much from the 31.5 to the 33.5 area in points. It should have been much higher. That to me always looks like wheel slipping. In other words, you're on an icy road or a sandy road, you put your foot on the accelerator and the wheel spins and you're not going very far. Until it gets until the price, in other words, until the automobile gets traction, not the wheel, but the automobile itself, in this case, until Goldcorp trading at 33.36, up 46, until it itself gets traction based on that particular phenomenon of energy being usurped and then stop being usurped, but in fact starting to work not one-to-one, but the relationship of the strong technicals kicking in gear with the clutch out, and it goes forward and it pops to 34.90 to 35.10. I'm looking at this and saying, so far I'm looking at certain gold stocks trying to act okay, but you would think with the Cyprus situation that Goldcorp in particular, because it's really it's often not always, but it's often a very sensitive stock to the price of gold. on the upside. And the downside has just been in its own orbit. But even on the downside, it hasn't made the full retracement that some have to the left side low bar. So here we go. So I'm saying to you that it needs to find traction. The weekly will be based on the daily action. The smaller time frame will dictate, like a little bit like a rudder, the direction of a larger move. But the tide itself is the most important thing, and that's what we need to talk about. I'm going to go backwards. You asked about the weekly, but I want to look at the monthly. The monthly tide of GG Gold Core has been since the 56.31 peak D. Now, let me just quickly do this, clarify this for some new listeners. In the ChapmanWave methodology, we look for the lowest, most identifiable low bar. From that low bar, if all the things are in sync, you should go to at least 4 higher peaks. Peak A, Peak B, Peak C, and then Peak D. At Peak D, not always, because other things can happen, but that's when you want to be the most conservative, because that's where the deepest pullbacks can occur. And I always emphasize, they don't have to, but that's when you can expect that they can occur. Well, the last Peak D was at 56.31 in the monthly chart. That was September of 2011. The one before that, also Peak D, was at 52.65, and that was July of 2008. The one before that was Peak F. That's a very unusual peak. It goes to Peak F, and then it pulled back sharply there as well. So the low that was established in October of 2008 to 1384, that particular low was the low that allowed for a big arch formation to go just above the 52.65 high of 2008. It went to 56.31, about 9% higher. And then what happened is it started to pull back in a series of down moves. And the last move was a rally from a peak A minus. And where is it trying to find support? It's trying to find support at the lows of 32.84 back in February of 2010, and then the candle of July of 2009, the low of 31.84. And what I've done is I've done a left side, right side price time match. And what happened was it touched that twice, and then it had that big spike up into September of 2012 to 47.42. And now it's made a lower low. It has not closed underneath 31.54 in the weekly chart. The MACD is very negative. Stochastic is negative at 16% because, like on the upside, when I say above 80% is very good, that's what you want in a stock or whatever you're looking at, because that's going to hold the buying pressure. On the way down, under 20% is negative and says, you got to be careful because this could hang around under 20% for a while. But the on-balance volume, that's why I spoke about the daily and the weekly charts. The on-balance volume is making a little V-shaped bottom, and it says, hey, this could have a bounce. And if that bounce succeeds, and now we can go to the weekly chart. If that bounce succeeds, based now on the weekly chart, with a kind of a doji candle, not one of my favorites, this particular pattern from the week of the 8th of February, the low of 31.85. But if by Friday afternoon, and this is going to be absolute, have you taken a position yet?
Basil, I have not. I'm looking at the long side, but the answer is no.
Okay. Now, this is going to be, I'm going to make a determination on speculation. But I'm also going to say, as of right this moment, the monthly chart, the tide is going down. I would not be surprised if gold core, sometime late April or May, regardless of what happens in Europe, actually goes down towards not the very low, but the whole area between 30, I would call it 31.80 to 34.80. That whole area, I think, has to become what can I put it? It has to become a base forming area. Within that, there could be a decent bounce. And that bounce is, in the weekly chart, I'm calling this leg A. But it's a kind of a pathetic one, but that's okay. At least it's a leg A. What needs to happen is that the MACD, which is the fast-moving average, has begun to turn up, and the slow stochastic is showing a positive divergence between the low that was made back in the week of January the 11th of this year and the rising stochastic and the low that was made just recently at, what was it, 31... 31.85. So on that basis alone, I would say there is now a good chance that the support level of 32.10 to 31.50, that's kind of going to be an area I'm going to be watching closely, because I don't think it's going to break that yet without at least going sideways to slightly up. That's the way the weekly chart is looking. The 9-period moving average at 33.80 is really key. If on Friday afternoon at 4 o'clock, gold core, and it'll only do that if the GLD is probably, which is at 115.16, only at 44 cents. If the GLD is trying to push the 157s, then gold core should surely move, and it should take out on a daily basis the 33.80 level. At any point in the next few days, if it takes out 33.80, if it goes to 33.81, that without breaking, let's call it without breaking 32.25, that's going to be leg C. At that point, the stochastic should start to improve in the daily to get towards the 78 or 80% level, and then I think there's a trade. So here's my thinking. I know that you're prepared to nibble if you have conviction that there's a good chance that you're going to add to that position. Is that correct?
That is correct. So
you're also not prepared to mess around if you're just looking at something that has very limited upside, but at the same time, it's just wasting money because it sits there and it's really not going anywhere, even if it doesn't break down. So this is my recommendation. If by the end, today's important because tomorrow, theoretically, the banks are supposed to open in Cyprus, and who knows what's going to go. I'm sure they're going to try to ameliorate the problem somehow or other. It won't be quite as bad. But if it turns out that it is bad, then we're going to, I'm pretty sure that's when gold will have just a sudden $17 to $25 pop to the upside. So because you've got limited downside right now in GG, because 33.35, let's just say there's big hesitancy about a run on the banks tomorrow, so that things move kind of smoothly. That'll say, okay, gold might pull back. Well, I think you got plenty of time because for a 50% stop, I just don't think it's a big deal. But I think it's worth being in a gold stock just for the in case something happens over the next few days. But as a chart pattern, it's not looking great. In fact, I could even put an oval formation here that says, well, be careful, because if it breaks to the downside, it could go down and then hold to the downside. That would be like the inverted stalk leg formation. So to pop towards the 31 to 30 area and then quickly pop back again into the body of this. So I'm actually not looking at all that much on the downside. Your question is, how much is there on the upside? And my answer is, until I get the MACD in the weekly chart crossing positive and the stochastic moving into the 20% area, I just see it being stuck for a while. But just on the off chance that gold is in fact going to pop tomorrow, that's the only reason why I would get it. I'm not sure that that's the reason why you would want to get it, because I know you like to look out weeks rather than just a quick trade. So my recommendation is, if you are interested at all, you can just start a very small position at 33, 34, because I don't think it's going to go down all that much at this particular point. The big question is, how much will it go up? And that has to do with gold's trading over the coming days. And silver should actually be moving with gold right now, and silver's not acting all that well. So I can see a pop-up. I can see a sort of a counter-trend rally, but I need the proof of the pudding. And I would just say to you, if GG crosses 33.80, then I would take a small position.
Basil, I appreciate that review on the longer term. That in particular was helpful. So thanks again.
My pleasure. Thank you so much. I always enjoy your call. Thank you, John. So, folks, this is what we're looking at here. There are a number of things going on, and it looks very much as if the market is saying, what do you need Europe for? We've done this before. Everything works out. The banks, the politicians, they all try to ameliorate the problem by doing something or other. I'm just saying that what I normally do for my subscribers is that when the Dow, INDU, gets to either peak D or peak E, it is kind of traditional for us to at least become cautious. So we took off our long position, which had a fabulous gain because it's 200% long. And then what we did is we went short, but I've got a pretty tight stop on the short, and all I can say is that I need to show you something quite important. The Dow is in leg C to the upside in the weekly chart if I use what I call a phantom peak, but that's really not the issue. There's just this is so clear that I can't do anything about it. I can't obfuscate, I can only mention it, that the Dow diamonds are actually in leg D up. The high of 145.35 that was made the week of the 15th had a fractionally low on last week, 145.15. And this week, what am I doing? It hasn't done the leg D. That was a mistake. It needs 145.36 to start leg D. That was a mistake. I shouldn't have put that in. It was in anticipation. The MACD is very strong. The stochastic in the weekly chart, 97% very strong. There is a little V-shaped formation forming in the on-balance volume, which I have to make note of, and that says that this particular pattern that I'm looking at here in the Dow Diamonds is clarified actually in my the chart that I show subscribers every day. If I can just find it. You see this particular chart here? It looks like what I call a Marimekko. Anybody remember Marimekko, the Danish, was it? Scandinavian company they fantastic designs, materials and things like that. Well, that's just what it looks like. In fact, I remember us having a sheet with these colors, purple and green, light green. Now look at this. This is the 120-minute chart, and this 120-minute chart is saying, I've made this double cup formation. There's a chance that I could make a triple top formation, and that is another cup formation. But at the same time, the MACD, which is rallying, is way low. It's showing less energy now than it was showing on the way up towards the 145.35 level. This is the 120-minute chart of the Dow Diamonds, and this is another one of the many charts I give subscribers with analysis every single day. But most importantly, you see that line there, that maroon or black line over there? Maroon. That's the 9-period exponential moving average. Look, it's just popped above it right now at 144.86. It's only down 42 cents, and it was down much more before. The diamonds were down 144 to 144.06. So they've come back pretty nicely at this particular point. 80 cents, hey, that's very good. So what we're looking at here is, yes, this could turn into some kind of a pattern where it actually forms a rectangle, just bouncing between the two levels as the market rotates through certain sections. Now, let me talk about the certain sections. Look at this. You've got SMJ. Was it SMJ? Smuckers? How did I get there? That's interesting. I love mistakes like that. Well, I don't love them. Can I get out? Yeah, thank goodness. Good. Let me try the guess. SMJ. What did I touch? Must have been shift. Smuckers. What's SJM? It's just Smuckers Jam. There it is. Look how fantastically it's done. I'm going to show you something. Look at Kellogg's. Look at K. These are defensive stocks. How on earth do you get defensive stocks going up at the same time as cyclicals and even bank stocks? There's a contradiction here, and I'll talk about that in a moment. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 39, S&P's down 3.23. Nice improvement.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. In this segment, what I want to do is I want to go through some of these stocks that have had spectacular moves, and I want to talk about some of the techniques that we've tried to use in some of the other stocks that we've had, and just to describe overall certain patterns that are very important and current. Tomorrow I'm planning on having a special show. That'll be Thursday. I want to go through a number of IBD. You know, I use IBD. I've got it as a newspaper since the 1980s, and I like it a lot because it gives you great ideas. But at the same time, you've got to be aware that when the market comes down, the IBD top 50, especially the top 20, can pull back really huge percentages, but on the way up, those are the stocks that do fantastically. And I'm starting to prepare stocks that I want to look at for the next big move after some kind of consolidation. So I'll be talking about some of those tomorrow. But look at this. This is I was talking about Kellogg's just as we went to the break. So Kellogg's, come on. Kellogg's, look at that move. What a killer move to the upside that's been. Leg E in the monthly chart. This is unbelievable. It's taken 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months, consecutive months of high bars without a peak. And it's even better than the rally that it had from the low back in, the low back in March of 2009 at 35.64. So it's only not even doubled. And normally stocks that have a fantastic move off the bottom, these are key stocks, very important stocks, tend to double before the time's up, or they can go higher. Now look at this. The Kellogg's, that's the monthly leg E. I'm calling it E for now, but it's E in the weekly, and I love it. The extension that I love on the Fibonacci extension is going above 261, and it's right now at about almost at 238. So from between 238 to 261, that's if it can get there. That would take it to about 66. Is at 64.31, and especially with this, I call it the worm. Look at the way it's climbed, like a worm climbs a leaf. Look how it's climbed walked the 9-period moving average, all the way to another leg D in the. This was a technique I call the instant restart. So that's Kellogg's. But wait a minute, BIIB. We had a dinner just a moment ago. Mentioned BIIB. Mitch says Biogen new high. Look at this. Walking the 9-period exponential moving average with the MACD starting to turn down. Stochastic still above 80. It's at 80.75%. On balance volume good, but it is really close to a pullback. But I can only say pullback. Why? Because the power of the MACD and stochastic in the weekly chart says it's at 179 BIIB. If it pulls back 171 to 168 and the 9-period moving average at 169.80, that's tremendous support. And the monthly chart is in leg, I'm calling it leg F for now. It could be an unconventional instant restart. Just to be safe, I'm calling it F. Stochastic and MACD are very good, but the MACD is starting the M formation of the fast moving average. Remember that for those of you who did my webinar on moving averages, that one is the one to watch because it can take you higher, but when it starts to pull back and the M culminates, that's when it can pull back. So BIIB, Biogen IDEC, well, I know that they're hiring here in the Boston. They had been hiring in the Boston area, and a fantastic company. So there's one, and here's another one. LL. Can you believe this? I think I mentioned it yesterday. Leg D, possible peak D in the leg C, possible peak C in the daily chart. Leg F/B in the weekly chart. Look at this. This could be an F/B in the monthly. Now, this is related, of course, to the home builders. Now, here's something that I was looking at today. So, lumber liquidator is still acting very well, getting a little bit toppy. Lennar. I did not want to short it. I thought about shorting it. I'd rather buy it on a pullback, but it's made a peak F daily. LN is the symbol at 41.50, down 22 cents. But a peak D in the weekly possible this week, and an E in the monthly. So I think that this could pull back towards the 40 to the 38 area. And then we'll look at it again because we had it once before for a buy, and let's see what happens. So stay tuned for Larry Pesavento coming up. Always a fabulous show with Larry, and I'll be back tomorrow. Have a great rest of the day.